The Rex Shares ETF, ticker symbol FEPI or FEPI, the Rex Fang Innovation Equity Premium Income ETF, has been trading now for around a year. And after backtesting this ETF, looking a little bit deeper into it, as well as reflecting on the shares of this ETF that I've owned now for around a year, I honestly came out with some results that were pretty shocking. Now in this video, we're not only going to talk about FEPI, the 25% yielding premium income ETF, but I'm also going to show exactly how this ETF works, what the returns have been so far since inception, and on top of it, I'm going to share with my real thoughts on this ETF and whether or not I'm going to be buying more, selling my shares I currently have, or just holding. Now, like I said, I was even sort of shocked with the results I came out with. So if you're a more income focused or dividend focused investor that's always looking for something solid, make sure to stick around, drop a like down below, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So just to back things up for a second, in case you guys are not familiar with this ETF, don't worry, we're going to go over and explain exactly how this ETF works and what it is, etc. So FEPI basically invests and owns big tech stocks. We're going to go over which names here in a second, but then with those stocks, writes cover call options over the stocks. Now, what does this do to the portfolio? What does this do to the holdings? It not only allows this ETF to have some massive potential income because of the huge premiums that some of these big tech names offer, really what most of them offer, but along with that, during times where the market might be trading sideways and or even down, this ETF is going to be able to farm some massive income potential from those cover calls. Now, because they own big tech and write cover calls, it says right here, equals enhanced income potential. Now, it also says the investment objective, this is also important, are capital appreciation and current income. So it's not that this ETF's only objective is to earn income, which it really has done a lot of that so far. I'm going to show you here in a second. But it also says even with the strategy, even with the cover call overlay, they still are trying to expose investors to some capital appreciation, which is awesome. Now, some other important facts about FEPI. As of right now, the fund's assets are massive, around 400 million, so this is no small ETF. The expense ratio is 0.65%. So yes, it's sort of an expensive expense ratio, but keep in mind, for a strategy that's this involved, this is more or less what you're going to find across the market, in my opinion. But now we get to some of the fun part, looking at some of the payouts that we've seen from FEPI so far. Now, one thing just at first glance, it looks like the distributions, at least so far, have been very consistent, which I personally like as an investor that's building out a long-term portfolio that is hopefully going to cover all my bills sometime in the future. It's nice to have sort of an idea, sort of a gauge on how much you're going to get paid on a monthly basis, because something like JEPI or JEPQ, that one month pays you 24 cents, the next month pays you 49 cents. Although it evens out to a nice amount in the year, it can be somewhat frustrating on the monthly basis. But that brings me back to the actual amounts that FEPI's paid so far. So we're looking at anywhere from $1.15 per share. It looks like as low as $1.08 per share, and anywhere as high as $1.20 per share as far as I can see. But it looks like somewhere within the range of $1.08 to $1.20, so maybe an average of $1.15 more or less, is what investors have been getting paid consistently, which is crazy because, of course, this ETF cost around $50 per share. Now, it also says right here, this might or might not be important to you, of course, but it is in bold. Listen up. It says current distributions may include return of capital or ROC. For full details and the composition of distributions, please refer to their latest 19A-1 notice. Now, why is this important? Well, return on capital is going to be taxed differently than ordinary income, than qualified income. So of course, look into your own tax situation. I'm of course not a tax expert or never claimed to be, but ROC is something for me personally that I definitely look out for. Now, next, also very important, looking at FEPI's holdings as of right now, the FANG Innovation Index is equally weighted and includes 15 highly liquid stocks focused on building tomorrow's technology today. The index rebalances monthly and reconstitutes quarterly. So again, for more income-focused investors that might want exposure to names like Micron, like names like Nvidia, Broadcom, etc., these names historically are not going to offer a massive amount of income to investors. It's just because these investments are simply more growth focused. Now, with something like FEPI, they sort of combined the growth focused investments, but utilizing a more income focused strategy, which is honestly pretty awesome and gives investors like myself that normally wouldn't really be heavily invested solely in these names, a large exposure to them with, of course, a huge potential for income. But names as of right now, at least, are names like Micron, Nvidia, Broadcom. There's names like Salesforce, Meta, Advanced, names like AMD, Intel, of course, Apple, Tesla, and Netflix. But now to get to the most important part, and this personally even shocked me. What is FEPI's performance on the max time frame? Has this ETF lost investors money? Has this ETF lost me money? Like I said, I started buying FEPI very early when it first started trading. I don't have a massive position. I think I maybe have 20 shares or so, but I have been thinking about adding more shares of FEPI to my portfolio. And after what I found here, I definitely know my answer. Now, FEPI on the max time frame, this is just ETF price. It's basically traded flat over the last year. It's actually up 0.77%, so has this ETF had a massive NAV decay? Has it lost half of its value as far as ETF price over the last year because of this high income strategy? The answer is absolutely not. It's actually up in the green just slightly, which for me at least when I look at more income focused investments, I'm looking if the ETF is trading sideways or down. That's sort of a red flag. If the ETF is trading up, well, the strategy probably has something involved with more capital appreciation potential. But because this ETF is traded sideways and even in the green slightly, and it offers such a massive distribution, so far so good if you ask me. Now, like I shared with you guys, the dividends so far have been anywhere from $1.08 upwards to $1.20. So just based off of simple math, over the last year, if you bought something that traded sideways and even went up a tad, but every single month you got paid over $1 for every single share that you have, I right off the bat with simple math in my head, I'm thinking to myself, that's been a pretty decent investment. But to dig into the actual numbers, a $10,000 investment into FEPI, and this is exactly 1 year ago today, that would have returned an investor $12,291.93, or a total return of around 23%, which is not bad whatsoever, which is why for me personally, at least, in my opinion, I think FEPI has been a good investment and has been a good income generation tool for my personal portfolio. Now, of course, some things to look out for is if FEPI does see a sustained bear market or something. Not even the cover call overlay is probably going to say FEPI. FEPI will probably drop along with the rest of the market. But if the market trades sideways for a while, if some of these top names in the holdings don't see some massive upside anytime soon, FEPI, because of the diversification and because of the strategy, will probably keep paying investors a massive amount of income for a while. So now lastly, where does it leave me with my personal portfolio, my shares of FEPI that I already own, and am I planning on grabbing some more shares after seeing what I saw over the last year? Now personally for me, something like FEPI would always remain still sort of a smaller position that I'm pretty much buying to use to generate more total monthly and total yearly distributions or overall income for the portfolio. Now that being said, after seeing how FEPI has traded in the first year, I'm much more comfortable than even I was so in the past to grab a few more shares of FEPI on red days. Now, do I think FEPI is ever going to grow like crazy as far as ETF price? I personally don't think so, but like I said a second ago, is FEPI a tool to utilize for your overall portfolio to generate a lot more income, a lot cheaper and a lot faster? Well, I personally do think so. But now going over all that, seeing how FEPI's performed over the first year that it's been trading, how much it's went up in price, how much it's paid as far as distributions go, I lastly want to hear from you guys down below. Are you giving FEPI the green light or the red light as far as buying it at these levels? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like in it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.